Hey, there's Bob Trade Genius, the 11th of April, and there's just be a little bit more macro today. So they started selling the miners off, and we started getting stopped out of positions, and so you got to pay attention to this move here. And what's interesting to me, I'm going to show you some other charts in a little bit, is that they keep doing these power moves down to this 1280 line. This is a Fibonacci line, by the way, too, from the move from the all-time highs in 2011. And so once it got back over this thing, they've had a heck of a time to try to break it. They're desperate to break this fib line so they can bring it down lower again. But notice when we started to move in the metals here in October. And remember what happened in October in the other markets, and I'm going to get to those in a sec, is that I think gold is running counter to the markets. It's more of a risk off. And I think this has been a bit of a early warning here that they've been trying to keep the markets higher, and they've been using the yen to try to pile drive this thing down, but it keeps hitting this wall here at 1284 area. And so that's something to keep an eye on. If it protects it again and it goes up, we're going to be in good shape. If not, then we're looking at, move down to 1240 area. We just have to keep an eye on it. So no big alarm bells yet, but it doesn't really matter to us. We're just going to get out of positions per our stops and not really enter anything new until we see what it does when it gets back down here again. So lately on these Fridays, they've been bouncing it right back up. So let me just show you what I'm talking about. Over here is where I think is a bigger story. I think it's looking at oil here, and oil. Look, when it started to roll over in October, and now we're at a point now where oil goes into basically rides up into summertime, and then starts getting hinky, and then in the fall it rolls over. This time we're rolling up. We couldn't make a new high, and now it's starting to definitely get way overbought. And so I'm looking for, I had basically $64 was my target, and I think you got it almost all the way up to 60, almost to 65 the other day, 64.79, yeah. And I'm looking for this to roll down. The economy cannot absorb higher oil, and this is all basically a speculative lift, and this has lifted the market up. So check this out. Looks identical. And so they do something when they lift oil, it frees some sort of collateral up for them then to buy the markets with it. But I think as oil struggles, you're going to see the market struggle, and the market really hasn't really been doing anything here of late. It's really been struggling. Today it was just awfully slow and awfully boring, and then we're also going into blackout period, so there's no cash coming in from the treasury departments of these public companies. So it's something to watch out for. And if we get a synchronized rollover here, gold, oil, and the markets, it gets a little deflationary, and then that may bring the Fed in to step in on this stuff. So just keep an eye on that. Going back to here, if we go look at the 10-year, they actually tried to lift it today, and but I don't see anything bullish about that. And so this is going to put pressure on the markets too, because it makes bonds relatively attractive. So you get a 10% move in bond and you're getting a yield. People are going to park themselves into bonds, and if you notice here, we're pretty overbought right here, and the slow stoke is just not exciting. So it looks like this is a chance for another roll down. We're getting a slingshot here again. These slingshots are basically telling us this move was too far too fast, and then starts going back down the primary trend again. So just bear that in mind. So I'm bearish in a sense. I'm trying to trying to see if this is just going to be a dip to buy, or if we're going to truly get a sell in May and go away this year. There's the catalysts are definitely ending, and the political season is going to get interesting. I noticed today Nancy Pelosi's starting to talk about infrastructure spending, which is really interesting to me. That means she's putting herself in a position to support the president, and why would she do that? So they got to be sufficiently worried about the economy. And then China is a big red flag. I mean, if China decides to devalue, and I think maybe this is what the markets might be sniffing out, it's definitely going to pop the dollar, and it's definitely going to create a worldwide deflationary scare. And I think that's what's on tap. We're just not going to know it. And that happened before. If you allow me to just walk down memory lane here. Let me show you what happened last time this did this. Is go to weekly here. I'll go to SPY because it's not all marked up like my other one is here. Okay. So this is 2015. This is when they devalued last time, and we had these huge downdrafts. We had one, and we had two. And then this is when the Fed came in, and even the Chinese came in and decided they were going to support the markets. And that's when we started ramping from basically 182 area, and we got all the way up to 2900, mid 2900s for the market. But it's definitely running out of gas. And if the Chinese do it again, so they could try to force exports out and block imports to support their economy, then I think we're gonna revisit this. And an 18% move this time, would be pretty nasty. So anyway, just bear that in mind. Just keeping an eye on everything right now, and we're still, from a long-term perspective, weekly we're still showing okay, but we won't know we're in trouble on a weekly chart until we get a good red flag down, and that's what we need to watch out for. But we're definitely running out of juice up here. It's the market right now is just running on buybacks, and so it's gonna be an interesting earnings season. But anyway, that's what we're all about, and we'll catch you tomorrow. And thanks for listening. Bye bye.